Did you know that nearly half of millennials are scared to invest because they think they'll lose everything? Or that the biggest investment mistake may not be what you think it is? Hello, everyone. Welcome to our channel, where we explore practical strategies for achieving financial freedom. Today, we're diving into investing, a topic that sounds intimidating, but is actually the key to building wealth and financial freedom. And here's the best part. We're not just throwing random tips at you. Instead, we're drawing insights from one of the most respected books on the subject, The Intelligent Investor by Benjamin Graham. Now, Graham's philosophy is timeless, and his principles are surprisingly easy to understand, even for beginners. Let's make investing less scary and more practical so you can confidently step into the world of wealth building. So, grab a notebook, get comfortable, and let's get started with Investing 101 for Millennials. Section 1, Understanding the Basics. What is investing really? All right, let's kick things off with the basics. In The Intelligent Investor, Benjamin Graham explains that investing is simply putting your money to work to make more money, but it's not gambling. It's not about chasing trends or doubling your money overnight. Think about it like this. Imagine planting a tree. It starts small, requires nurturing, sunlight, water, and patience. Over time, that little tree becomes a huge one, giving fruit and shade. Investing works similarly. You start with a small amount, nurture it, let it grow with time, and eventually it rewards you. But it takes patience. Section 2, Graham's Key Investing Principles for Beginners. Now let's dig into the principles that make The Intelligent Investor a classic. Graham believed in what he called value investing. The idea is simple. Buy stocks when they're worth more than their price. Sounds smart, right? Graham also tells us to buy with a margin of safety. Imagine you're buying a house valued at $200,000, but you manage to negotiate the price down to $150,000. That $50,000 is your margin of safety. If the house's value dips, you're still ahead. Section 3, the emotional side, why patience and discipline matter. Investing isn't just numbers on a screen, there's an emotional side. The Intelligent Investor tells us that fear and greed are the biggest enemies of good investing. The stock market will rise and fall. Some days it'll feel like you're losing. Other days you'll feel like a genius. But Graham reminds us to stay disciplined. One of his famous lines is, the stock market is a voting machine in the short term and a weighing machine in the long term. It means that while the market may be unpredictable day to day, over the years it generally reflects the true value of investments. So, patience and discipline pay off. Section 4, Avoiding Common Pitfalls. Graham's advice on speculation. Graham also warns about something called speculation. In simple terms, speculation is like gambling. You're buying stocks hoping their price will just go up because it's trendy. And for millennials, speculation can be tempting, especially with the rise of social media hype around certain stocks. Graham advises that if you're serious about building wealth, stay away from speculation. Instead, choose companies with strong fundamentals, ones that make good profits, have strong management, and don't rely on hype. This way, you're building wealth on a solid foundation. Section 5, Diversifying. Don't put all your eggs in one basket. One of Graham's classic teachings is the importance of diversification. Think about it like this. Would you place all your bets on one player in a poker game? Probably not. Diversifying means spreading your money across different investments like stocks, bonds, or even real estate. For example, a millennial might want a mix of growth stocks, which are riskier but can grow faster, and some bonds, which are steadier and help balance your portfolio. This approach protects you if one investment underperforms. It's like having multiple anchors for your boat to stay steady in rough waters. Section 6, the defensive investor versus the enterprising investor. In The Intelligent Investor, Graham describes two types of investors. The defensive investor prefers safe, lower-risk investments, while the enterprising investor is willing to take more risk to chase higher returns. For a millennial, it's about knowing which type you lean toward. Defensive investors might stick to index funds or ETFs that track the overall market. They're easy to manage and spread the risk. On the other hand, enterprising investors might research individual stocks and invest more actively. Either way, the choice should fit your lifestyle and comfort level. Section 7, How to Get Started as a Millennial Investor. All right, so how do you start? First, choose an investment platform or brokerage account. Nowadays, there are tons of platforms that make investing easy and affordable, even if you're starting with just $50. Look for platforms with low fees and user-friendly interfaces. Once you're set up, start small. Even a few dollars a week can build up over time. Graham reminds us that you don't have to have it all figured out right away. Start by buying a low-cost index fund or ETF that tracks the S&P 500. Over time, as you learn more, you can diversify further. Section 8, the long-term mindset, building wealth. Over time, Graham's greatest wisdom might be his emphasis on the long term. He says true investing is about building wealth over decades, not days. It's about making wise choices consistently and watching your money grow over time. Imagine looking back in 20 years, seeing how your small steps led to a strong financial position. Whether it's owning a home, retiring early, or just feeling secure, your future self will thank you for every small investment made today. If you're ready to take your first steps in investing, comment yes below and share your thoughts on what you're most excited to learn. And if this video helped you feel more confident, give it a thumbs up and subscribe for more practical financial tips. Thank you for watching. See you in the next video.